All right, guys, we are live. We're going to be journaling the market for today and reviewing everything in detail. So I took 4 trades. We're going to be talking about every single one of them. I'm going to be posting my P and L. Actually, I'm going to do that later tonight. And then I just started this new thing called a psychology score, which is pretty sweet, where every single day I have a certain set of things that I need to do every day based off of what percent of those I complete. That's my psychology score. And then as well, I get bonus points for doing certain things. Like if I say no to a trade, I get 2 bonus points. If I don't get upset after I lose a trade, I get 2 bonus points. If it doesn't affect me the rest of the day, I get 2 bonus points. 4 points for every hour of live streaming during New York session, and then 2 points for each hour of journaling. Ideally doing 2 hours a day, and then there's a whole bunch of other smaller things, but like overall, all these points add up, and they're going to contribute to a psychology score, which is going to at the end of the day, it's going to be a letter grade, like a C, a B, an A plus, D, F, and that's going to go along with the trading ratings that I'm doing every single day. So I'm really excited to do this every single day. I think this is a really cool idea. Here you can see this in this chart here. You can see I did mine for yesterday. Came out to 81.25%. That is a B. And then I'm gonna code like a if statement. So if the score is 81.25, then that means B. If it's 87.5, that's B plus. You know, that kind of thing. It's just gonna code it. So, all right, let's talk about the market, what happened today, and go into detail talking about exactly what happened. So here we have price action today, and let's go with each trade one by one, and let's also write in the journal exactly what happened. So here we go. Scrolling down here, I'm gonna also pull up chat on my phone. It's just loading. My phone's at 2%. Alright, whatever. I'm gonna charge my phone. Okay, so back to what I was saying. Let's write in my journal here. So I'm gonna be live streaming ideally until 6:05 my time. So I'm not calculating that in Eastern. 2 hours from now, and yeah. Okay. Wednesday, January 8th, 2024. Going into the day today, I was bearish. This is because of the good liquidity below, previous month's low and previous week's low, and how we were aggressively responding to the daily BPR within premium of the most recent price range. And let me just pull up the weekly profile. In the short term, I was anticipating a move towards the triple equal lows that we had below. I framed the daily profile was not a typical daily profile, and I realized this. I simply framed a sell model towards those triple equal lows, and that is exactly what happened. So here you can see that right here. So copy image. What time frame is this on? Whoops. We'll figure it out. So here we have, let's get rid of all this. Did we end up getting SMT with this high here? Because we got SMT with this high. Do we end up getting SMT with any of these highs? Not super sure. Anyway, here we had a 4-hour order block. Let's mark that out real quick just to show my point. There it is, the 4-hour order block. So we had the 4-hour order block here. The session distribution level right here. And then let's actually mark this out on the other chart on NQ1 exclamation mark. We had the 4-hour order block right here. Boom. And then what happens? We get a push into it. And I noted that we had bottom right, 4-hour OB minus. And we swept out this high, good liquidity below. And where did we go? Like I said, we went to, well, first we went to our session distribution level. So let's mark this out. And then we went to our session D minus eventually. And let's get rid of this. Like I said, we had those pretty significant draws on liquidity that were from all the way over here, triple equal lows. We essentially have London and Asia of a prior day. turn this off now. I'm just gonna do London and then Asia. I'm not gonna mark out previous days. Okay. And then yeah, like I said, went to the session manipulation level here. And yeah, basically from here you can frame a sell model. That's exactly what I did. Well, let's mark this out a little better here. Let's mark this. Let's just do this. That looks a little better. Okay. And yeah, nice sell model. So here's my expectation. Where was it? In my journal. Let me see if anyone said anything. No one said anything. Okay. And then once again we had midnight right here. Bottom right. And yeah. So expectation. Versus reality. That's crazy though. I just didn't expect us to go sweep it twice. So the more times we have manipulated a high into a key level, the higher probability the trade is going to be. Crazy. It's exactly what happened. I'm gonna send this in the group chat. Okay. Let's talk about the first trade I took. So this was trade, let's show my other screen. Trade 62. This was a loss. Alright. So okay, trade 62. Let me see if I can find this one. Essentially, so the idea here was I need to switch the screens again. Okay. The idea here was, this honestly was not a super great trade, but let's see. Yeah, so we had a 3-minute gap here. And I think we had SMT at the lows here. Let's see if I can find it. Yeah, we had SMT at these lows. So 3-minute fair value gap. We had SMT at these lows. SMT at these lows here. I think we had another SMT with this low. This low, right? Okay, so we had 2 different SMTs. We had pushed into, I think it was the mean threshold of a order block here. I guess we pushed into, yeah, like if I measure this out, the series of down close candles here, maybe it'd be better on the 15-minute. Nah. So it wasn't even a 15-minute key level, so that's already a red flag. So don't really use 5-minute key levels. It's not great. But you can see here's the midpoint of that. So why was I using a 5-minute key level to frame a model? That doesn't make sense. It really doesn't, huh? 5-minute OB. Five. Okay, so we had SMT here, SMT here. I kind of thought this was a data high, but next time I'm not considering this a data high, because this was the true data high right here. We already swept it out. So then here's a 1 minute gap here. And so I just saw decent liquidity above. I just saw all this. But just understand, like, this is not as good as this. Was that a 1 minute for value gap? Anyway, we'll just mark that as a fair value gap. Okay, and then on the close above this up close candle, that was my entry because this was a breaker. And so I entered right here. Stop loss, honestly, just below the candle. And I thought I could go for a 1-to-1 here. Anyway, I was trying to, I think in this situation though, like, it's just, yeah, I'm not super happy with this trade. I think I really forced it and overcomplicated it. I mean, seriously. All right. I forced this trade and overcomplicated the chart. Instead of waiting for a trade to come to me, I wanted to create the trade in. I'm not gonna say that. This was a this was more of me trying to create a trade into existence. I can't ever do this again. This is a new rule. If something is not an obvious trade, do not take it. Do not try and create trades into existence that are not there. If something are not there. If I do this, I am breaking my rules. Okay, new rule added to the journal. Okay. I entered on the 30-second breaker. Was liquidity above and below, and there was liquidity above and below, and the setup was not screaming off the chart. I more or less created this into existence when it was not an obvious setup at all. I need to be especially careful not to. I can't let this continue to happen going forward. There will be a new rule in in place to prevent this, and I will force myself to have extreme patience and not just take a trade because I want to take a trade. Instead, wait for truly good and high quality setups. Okay. Other items to know about this trade. It was outside of the macro at what time? 9:13? 9:13. Yeah. 9:13. Not a good time an entry at all, especially when the chart is this unclear. What Okay. Trade 62. L singular count 1-1. Okay. We covered trade 62. On to trade 63. Alright. So trade 63 was a little better. It was a little better. We had decent liquidity below here. I saw this. Saw all this. And then I'm gonna check if we had like SMT or something. We didn't even have SMT, so I don't know what I was on. So there was no obvious sweep, no SMT. All that happened was we inversed this fair value gap with good liquidity. And we were going into the macro. So I'm pretty sure this was the trade I took. And this could have been better. There was no SMT. We weren't delivering from key level. It took too many candles to inverse. All of the above were just reasons this was not super ideal. let's write all this down. Trade 63. Trade 63. Copy traded. Trade 63. Copy traded L121. Okay, the idea with this was simply that we had a 3-minute inversion with good momentum and good liquidity going into the macro. I thought this was all that was needed and that it should be pretty high probability. However, there are quite a few issues with this trade, actually. One, we didn't even actually have a liquidity sweep. This is a huge red flag, and it makes this trade so much lower probability. It took a ton of candles to inverse. Eventually, yes, we did have good momentum, but it took so long. It was honestly, it became a little irrelevant. It was not a plus and a light bulb setup. It was simply okay with good liquidity, but definitely not a plus, because especially because there was not even a sweep. Not only was there not a sweep, but if there isn't a sweep, you should at least expect there to be an SMT or something, but we did not have that either. So even though this trade seemed good in the moment because of liquidity and momentum, in reality it lacked a lot of elements that a truly light bulb setup has, like inversing within only having SMT and getting a good sweep of a high. I'm not gonna rewrite that. I would not take this trade again, simply because we did not sweep the high, and it took if it were to happen again, simply because we did not sweep the high, and not sweep the high, and it took too many candles to inverse, so it really was not a light bulb setup, even though it had good liquidity and momentum. So yeah, you can see like it was like boom. I was like, oh, that's awesome candle. Let's go. We're gonna go down there right away. And yeah, just it wasn't as good as I thought it was. Even though we were in the macro, we didn't even sweep the high. It just was not as good as I thought it was. Man, journaling really helps you a lot. Let's see what time it is. 4:50. What time did I start? Yeah, we didn't even sweep the high. I mean, it honestly kind of bugs me that I took that. All right. No one said anything. All right, on to the next trade. Trade 64. This one was a win. We're going to review this one right now. So, this one, let's talk about this one. Hang on. I gave it to Dad. I mean, he doesn't know that, but it's on his counter. It's on his nightstand. Okay. Alright, got chat pulled up. So, the trade that I took was we sweep out this low here. I wonder if that was as low of significance or not. Not super sure. It was low of the 4 hour. I don't know if that's relevant. No, it wasn't. I guess it was. Okay, we sweep out these 4 hour lows. And then we come up pretty aggressively, and we inverse this 1 minute, and we inverse the 30-second. I think I just took this on the 1 minute. Pretty obvious LRLR here. And then yeah, I think what happened next? We're delivering from a fair value gap. And we inverse this. With pretty good momentum. So I just shot for like a 1-to-1 here. And yeah, that was literally it. Did we like have SMT at all? I don't even know. So actually we did, I think. Wait. This low. This low. And this low. This is a lower low, higher low. Low. Okay, low. 954 low. And then 810, 808 higher low. 954 low, 808 higher low. So both of them were higher lows. And then this was a low, 954, and then 758. So I don't think there was SMT, unless there was SMT with YM. Let's just check really quickly. If it's not obvious, I'm not even gonna. Yeah, it's just not obvious. So if it's not obvious, I'm not even gonna record it. But yeah, this was the trade. Trade like 64, I think. Honestly, like this was good. Dodgy took this, but I could have also seen this not working. I mean, honestly, I think I took this because I was just kind of like frustrated that I kept losing and I just wanted to win. And I felt like it was going to work. But if I'm being completely honest, like, well, it was a good trade. I just wish I had more confluences. But I guess it was good. We swept out a low, delivering from a fair value gap. Good LRLR. It goes to show how important the liquidity sweep is, because like that liquidity sweep like really means a lot, honestly. You can see we inverse this here, but we don't go up there because we don't really have an obvious liquidity sweep. Here we do. So let's write this down. This was trade 64. W singular account 121. This trade was decent, but even this trade, if I'm being completely honest, was me more or okay. Even this trade, even though it was pretty decent, after getting two losses, it was getting to the point that I really wanted a win and was looking for whatever I could get. This is not the mindset I should have been in at all. The reason, in my opinion, this trade worked and was good was that it had the two biggest things, the three most important things needed in a good IFVG setup. Liquidity sweep, delivering from somewhere, FVG, good liquidity above. Because the trade had all of these things, it did work, but could it have had more confluences and been higher probability? Sure. If I were to see this trade again, I would probably take it because of the good sweep, momentum, liquidity, and delivering from a FVG. But once again, I would only take it on a singular account. Okay, trade 65. I'll review it. I'll review trade 65 in a second. All right. Trade 60. Oh, that's not good. My phone fell. Okay, trade 65. This one was a W. This one was on a singular account. It was 1-1, and this one was awesome. It was by far the trade of the day. This is the one I definitely should have copy traded, and it's why it's so important to be patient, and why no trades / less trades is better than more trades, because it's why it's so important to be patient and wait for the truly good setups. Wait, I'm just gonna copy that again because I need to get the image. Okay, let's copy this over. Trade 65. So this was awesome. Dodgy took this one as well. Happened in live time. It was a 3-minute inversion. It was right after this. Essentially, well, we had swept out all these highs. So let's mark that out. Sweep out all of these highs. So, boom, boom, boom. I'll just mark out one. So sweep out this high. Then we have a 4-hour key level. It's this 4-hour order block right here. Just gonna mark that out like this. And I'm actually kind of curious, did we push into like the 1-hour level? Or maybe it was the mean threshold or something. We didn't quite push into the mean threshold. What about on the 1 hour? What about 2 hour? Yeah. So like, I would still just use this as a 4-hour level, honestly, because it doesn't look like it was any better on the 1 hour. Anyway, we had this 4-hour order block right here. We were delivering from this. Whoops. 4-hour OB minus. So we're delivering from this. And then we get an inversion in 3 candles with really good momentum. This is really, really clear AMD. Very, very high probability trade here. And not only did this inverse in 3 candles, but I think we had an SMT with this high. I'm almost sure that we did. Yeah. We had SMT with this high as well. So SMT with this high, good sweep, and we had, I think, yeah, it was at the session manipulation level. So if I pull up stat map, look at this. Right at the session manipulation level. Crazy. Bottom right, session M minus. There you go. And yeah, we're delivering from a 4-hour level, swept out a high, got SMT, get an inversion in 3 candles. Yeah, this was just like, this was A++. This was really, really good. Now, we came down. I was anticipating us to go take out this draw all the way over here. So I was anticipating us to go take out this. This was Asia's prior. This was equal lows, triple equal lows from a prior day. So this is what I was anticipating us to take out. But unfortunately, we did not come here, and so we need to reevaluate why we did not actually come here. Because you'll note this is right at the session distribution level as well. And it might have been the daily distribution level too. Man, okay, this is crazy. I think... Never mind. Just kidding. The daily manipulation level is right here. Oh my gosh, guys. We went to oh, this is crazy. We went to tomorrow's manipulation level already yesterday. Today's manipulation level happened yesterday. That's a nice confluence for tomorrow to be bearish. That's really nice. Okay, session manipulation level, SMT. We get an inversion in 3 candles. This one would have been a good one to target 1-to-1. Or these relatively equal lows. Okay. I thought we were drawing here. So we have to figure out exactly why we didn't draw here. Now, although this trade was amazing, I slightly messed it up, and I need to figure out why. I wanted to see the triple equal lows from last week get taken out, especially because we were at the session distribution level, or especially because this was aligned with the session distribution level. It was also aligned with the 4 to 4.5 of the manipulation move. So why did we only come to here? That's what I want to know. Because these were 4-hour lows, right? What was significant about this low? I don't understand that. Like, I'm just trying to figure out what's significant about this. Oh. This was the low that we stopped at. I was shocked we stopped here and it didn't really make sense why we didn't continue down to the triple equal lows right away. This low was not really significant at all, so it was pretty confusing. After doing some digging, quite a bit of digging, here you can see that the market, that part of why the market stalled here was we ran into a new day opening gap resting right above the draw on liquidity. Considering we already took out so many lows, and some pretty good equal lows, it made sense in the short term for a lot of smart money to have already taken profit, and this new day opening gap only slowed price even more. In the future, when I have a trade like this, where even when I have high conviction in the triple equal lows, I'm still going to take partials on the way down just in case, because you can see when we don't go there, it really is good to have taken partials. In this specific situation, since we had the new day opening gap before the triple equal lows, it would also make sense to possibly take a partial there. Even with high conviction, you still should take partials. Lesson learned. Lesson learned. Then the other reason that we stalled here and didn't continue down to the triple equal lows right away is because we ended up getting two different bullish SMTs, which I did not see. We had SMT here. SMT here. And then SMT here. Here, the other valuable lesson here is to constantly be once you take a trade, make sure you don't check out. You should still be watching and analyzing the market for red flags, and here if I had seen the this stacked SMT and new day opening gap, it would be worth taking all off there. So lessons learned from this: one, take partials even when high conviction in the draw on liquidity. Two, trailing stop loss as you get in profit can be nice. Three, once you make your trade, do not stop analyzing and check out. You should still be aware of what is going on. Here, if I saw these stacked SMTs within the new day opening gap, I would take all off there. Good lessons learned. On to tomorrow. Overall, this trade was the best one of the day. Should have taken a partial at the equal lows. Just glad I trailed my stop and got out when it came back up to 121. I did realize we had the SMTs, and that's why I got out. But if I had realized sooner, I could have got out sooner. All right, that's all the trades for today reviewed. Yeah, on to tomorrow. We should review a little bit more though. Just talk about what happened. Now we did come up and sweep this high again. At which point we then ran all this liquidity down to our final target here. I wonder if anyone took any trades on Twitter. Let's go look at that real quick. But in general, what we anticipated happened, so, which is pretty cool. Stat map and unicorn. When was this? CL? What is CL? I have no idea what chart this is. In general, though, this trade, I would definitely not just enter on this. I would need to see a lower time frame. Like this lower time frame breaker, I would enter off of that, and then I wouldn't just enter on that breaker for value gap. Now do the Robins. He should do the Robins. Kane's goated, bro. Do you have to pay for this? I'm curious. Let's just go look at it. I hope it's free. I'm gonna switch it real quick. Okay. We'll go back now. Thank you. We'll be sending you an update shortly. Okay, I want this, but like low key, I think my spreadsheet's a little better. I like my spreadsheet so much, but it's a dope website. But like, does he have a trade log, a psychology score, total P&L? Does it calculate your Kelly bet size? I didn't think so, bro. Only mine does that. I might make my own website and make it free. If I knew how to make a website, I would do that. Someone should help me. Anyway, back to the charts here. Oh, back to looking at trades. Okay. NQ shorts. AM, market maker sell model. What time was this at? 10? Yeah, he just traded this. He traded the delivery from the order block, and then he entered on 15-second confirmations after sweeping the high. That was a pretty sweet trade. Good job, F3, for catching that. Yeah, like on the close below this breaker, you can enter one, and then enter another. Right on the retest of this breaker for value gap here, and yeah, very good execution by F3. Here you can see that right here. Close below this breaker, and then we have another breaker for value gap here, entry here. Yeah, overall this was really nice. F3, good job. I probably could have taken a trade like that, honestly, but yeah, it's hard because you have to really constantly be watching all the charts and all the time frames and the 15-second and that kind of thing, and yeah, I could have taken a trade like that, especially as we're delivering from the 4-hour order block after sweeping all those highs with good liquidity below. So I'd honestly take all off here, because look, this is the end of that LRLR, but we did end up going to the equal lows lower. So okay, the correct sequence of numbers presents opportunities to most blind eyes. What does he mean by this? Trade of the day, F3. Good sweep. good momentum. I don't know. I kind of whenever F3 posts a trade like that, I just feel like I don't know. It's got a good sweep and good momentum and a good inversion, but it's not really targeting good liquidity. I like trades that target like really obvious LRLR, but I in general not F3 so it's F, but in general like he's a lot better at finding trades that have a good sweep with a good he's a lot better at finding the trades that have a good sweep and a good inversion. I'm not as good at that, but I feel like sometimes I can find trades with the right liquidity, but I won't get the sweep like today. Like I didn't get the right sweep and 3 candle, 4 candle inversion, that kind of thing. Might get pushed back on the sweep, but that's okay because this is just the truth. My entire life I've been a truth seeker, seeking the perfect me, the perfect perception of the world around me, how I can create the life I dream of. I love psychology, philosophy and psychology have. Crypto hit below 1 trillion. Half a year after a month of break. Dude, I was wondering where Hydra's been. I'm back and will continue to share value for my community here on a regular basis from now. Yeah, Hydra straight up disappeared. I've been struggling without his posts, honestly. Good inversion here. Same thing here. I think was this like on the 32nd? No, he entered on the 1 minute, but he entered before the candle closed. I don't know why. Like, I just don't know how he can just justify doing that. I guess just because of liquidity. Yeah, I guess he knew because of liquidity. He was just entering probably on a lower time frame momentum candle. Like, let's go back to that trade. Like, genuinely, you could do this a little differently if instead of... Because we have the 4-hour order block, so you know we're probably going to go to that above this LRLR here. So if you want to redo this, right, one option is you could take this trade. So we get the sweep. Delivering from the fair value gap here. One option is when we get this, so yeah, this was a trade SOTEP marked out, but like once again, like there's not really obvious liquidity, so I don't think I would I don't think you would take it this low. But once you get up here, I think it's fair game that once you get this momentum candle, I would just enter on this momentum candle. Stop loss like right here. And then target the end of the LRLR here. See, that's not even 1-to-1. Nice, thanks for the liquidity wick, delivering from a fair value gap. So, like, if I were to redo this, trade 64. I'm going to review trade 64 in more detail and talk about how you could have maybe possibly framed a better entry on the 32nd towards the LR just based upon momentum. So like I said earlier when talking about trade 64, we had a 1 minute inversion targeting really good LLR, but the main issue with it was that if you enter on the close, you are entering pretty high. As seen here. Because this is super good liquidity, we are delivering from a fair value gap, got a good sweep. You can have a lot of conviction in this LLR getting hit. Because of this, it is possible to refine a 30-second entry before the 1 minute closes, just based upon momentum. I will show how I would have done this in just a second. I wonder if it becomes a little more obvious on the 15-second. Here is an image of Dodgy's version of this trade. You can see he, in this special circumstance, is actually able to enter before the 30-second closed, just based upon how obvious the LLR was and momentum. Now, normally you wouldn't want to enter before a candle close, but with really, really good liquidity, and having swept a low like this, it can be acceptable. So the way I would have possibly framed this would have been using a momentum candle and not necessarily an inversion. You can see the 30-second see, it's not exactly super clear that the 30-second reverses here, but in this specific situation, because we get a thanks for the liquidity wick, into a FVG below and then close back higher. This, in my opinion, once this 30-second candle closes, in my opinion, this is valid to enter off of just as a momentum candle towards really good LRR. You wouldn't really need to have your stop loss all the way down at the wick here, just a reasonable distance below, and you can see instead of the trade being a 1-to-1, it ends up being a 1.6-to-1, just because you used a momentum candle on the 30-second paired with good liquidity and common sense, and didn't trade mechanically. So that, yeah. Okay, I think that about covers it for all the trades, but lots of value here. Yeah, it's a good lesson here. Like, don't trade mechanically. If you get a good momentum candle, thanks for the liquidity wick, enter off of that on the 30-second, and then let it ride. I mean, this, yeah, don't trade mechanically, trade based off of liquidity and momentum. And yeah, that's a really valuable lesson today. So you can see we got better RR, and honestly, yeah, just a better entry. So yeah, you're just using some common sense here. All right, with that, I'm gonna end the stream.